Welcome everyone to this edition of Frontier Opening Bell. It's Wednesday, the 16th of December, and my panelist this morning, Oluwa Odetunde from Greenwich Merchant Bank. She's in charge of macroeconomic analysis, while Onyeka Ijoma from Vetiva Capital is in charge of industrial goods analysis. Onyeka is smiling because BUA Cement has about 100 billion naira bonds, 7-year bond on the streets right now, so which opened yesterday. So that's a whole lot of money on the street, by the way. If you are part of that deal, then you could be smiling as much as wide as Onyeka is this morning. But we'll talk about that. Why BUA Cement needs 100 billion bonds, and if this is something that we know Dangote Cement also has some commercial papers already on FMDQ. So Onyeka will drill into some cement story for us this morning. But let's get across the market. Dangote Cement shares and Lafarge contributed to yesterday's big jump on the Nigerian stock market, aside the banking sector and insurance very strongly. The Ivorian market printed 0.66% negative, down below the 132 reading. Egyptian stock market softened up by 0.1%, but Kenya and South Africa are down by the margins you can see on your screen. So for the East African market, the big story coming through this morning is from McKinsey, saying that Kenyan banks will see close to $3.5 trillion decline in revenue moving forward over the next 5 years because of the write-down in loans, on loans defaults. That's one big news that seems to be playing into the earlier outlook for the banking sector, not just in Kenya, but around the world, and for about 7 African countries by S&P Global Ratings. The restructured loans, real estate loans in Kenya, according to the central bank yesterday, 123.8 billion in just a couple of months. That tells you how impactful the COVID-19 had been for the real estate business in Kenya. And Nigerian market real estate does not look any different, by the way. Absa Life Assurance has a new managing director, Gitanji Waiguru. And Ethiopia Natl Bank started loan scheme for damaged investments, while on the island of Seychelles, Merge Exchange and Horizon Fintechs are building a new platform called Upstream. It's going to be the first global exchange for crowd-funded companies. For companies involved in crowdfunding, you now have a new platform of an exchange, which Merge Exchange, which is a coin-based exchange, has put together. Oluwa, just to give us a minute of what you think, the real estate loans in Kenya, yes, the structured loans, 123.8 billion. Do you think Nigerian real estate is much better in terms of what we've seen in recent times?
Thank you for the question. So, I mean, the real estate sector in the Nigerian economy, we still need to see that push in the real estate sector. We aren't still there yet. There's a lot of potentials for the real estate sector, but we see that, you know, the current level of population should cover for real estate, the improvements we should be expecting to see in the real estate and demographics, and the fact that, you know, the young population of the Nigerian economy should drive an improvement in this sector. But we aren't really seeing that on one end. Also, where we're expected to see, you know, more policy innovations, like, you know, in terms of mortgages and, you know, developmental loans and things like that, we aren't seeing, it's not really backed by the federal government yet. So we're still seeing more of a slowdown, and especially during the COVID-19 disruption this year, we saw that, you know, the real estate sector, you know, underperformed, you know, its peers. What we expect going forward is that, you know, there should be more improvements towards that line. The real estate sector should be one sector we should be pointing towards when looking at a country, you know, exiting in recession. Or, you know, because of the its underperformance so far, we aren't really seeing that. So, you know, more innovative policies, more sustainable policies towards the real estate sector should see improvements in the sector broadly.
Thank you. One major ingredient that we seem to focus on mostly in Nigeria when it comes to real estate is with cement. So that takes us to the Nigerian market story, where Dangote Cement and Lafarge yesterday contributed to the uptick that we saw. The industrial goods sector was up a bit, slightly above 1%, because Dangote Cement and Lafarge shares moved up. And that's part of the Nigerian story, aside the fact that the World Bank has approved the $1.5 billion for COVID-19 pandemic and state levels, transparency and what have you. But again, the story that seems to be resonating is the NCC telling Nine Mobile, Glo, Airtel, MTN to shut down SIM cards that are not linked to national identity numbers in 2 weeks. Food inflation for Nigeria came in yesterday. Headline inflation is now at the doorstep of 15%. We can just keep 15% in for December and we'll just move on into the new year. That's just going to be the big story. But the BUA Cement 100 billion 7-year series one unsecured bond is one big story that Onyeka is one to bite into. Orelua, we'll come to this MTN story, NCC story around this SIM card issue. But let's get some cement story from Onyeka.
Okay, thanks, Boston. The BUA Cement bonds issuance, it's going to be their first one. So it's going to be their maiden bond issuance. They're looking to raise about 100 billion out of a 200 billion naira program. And this is, I think, I feel like the terms of this loan just shows where the market is now, where the debt, the fixed income and the overall debt market is now, because the terms are overwhelmingly favorable to the issuer. We have, it's going to be, the rates are going to be done by book building. So, we don't yet have an idea of where the rates will close, but we know that it's unsecured. It's going to be unsecured, so it's not going to be linked to any collateral. There are no collateralizations here, and then it's also going to be a callable bond after an interest after a period with an interest moratorium. Very overwhelmingly favorable to the issuer, and it just shows where the market is now. It shows the kind of it also shows the kind of interest people have in the infrastructure space in Nigeria and the cement and where the cement market is in Nigeria and across West Africa. And we know that the proceeds are going to be used to pay off related party loans and also fund working capital. At the moment, the BUA Cement funded, BUA Cement currently has a little under 100 billion in related party loans, which was used to fund some expansion plans in the past, and now they're looking to get rid of that. Such a huge amount of related party loans and another great for corporate governance purposes, and so this is also positive from an ESG standpoint, and takes them more in line with arm's length transactions and more in line with the market. We expect this to be hugely successful. We expect oversubscription, and we expect low rates from this.
Interesting cement story. Again, if you look at the whole work, that the whole rivalry, competitive rivalry between BUA Cement, Dangote Cement and Lafarge, I think this is all BUA Cement idea to also ramp up its own production. Again, looking at some of the exports that is trying to push to Niger Republic and a few others. I think the whole talk about infrastructure spending and all that, this is in the money for this cement company, building outposts outside Nigeria now, following in the footsteps of Dangote Cement that is already operating about a dozen African countries, West Central, Ethiopia, and all the way to Cameroon. So it looks Nigerian cement companies are taking over Africa, isn't it, Onyeka?
Yeah, when you look at it, there's a huge reason why Nigeria is a cement hub in West Africa, and that reason is mostly because of limestone. We have lots of limestone deposits in the country. Outside of your clay and your the beach sands that we typically have, on Nigerian soil. Most of the natural ground we have, in Nigeria, especially in the north central and the southwestern parts of Nigeria, are largely limestone. So just the normal ground you work on, are based on, limestone deposits, and so we have an abundance of that in the country, whereas we have much fewer quantities outside of, in West Africa, outside of Nigeria. And, so it does make sense that, these companies use Nigeria as an export hub for cement, to other Western and Central African countries. BUA Cement, like you mentioned, for example, uses their Kalambina cement base, Kalambina cement company, to export to Benin Republic and Niger, which the distance from the Kalambina cement plant to the major trading points in these countries are between 40 kilometers and 100 kilometers, across both countries. So it makes a lot of sense, for them to pursue these exports. Dangote Cement, we've talked a lot about the export strategy in the short to medium term, where they're trying to pursue both land and sea-based exports across West and Central Africa, and they're planning to build grinding plants in Niger, in Togo, and in Togo and in Mali, where we export clinker from Nigeria and then they grind it and bag it in these countries and also export to the neighboring countries. There is a lot of benefits and the AFCFTA coming in just supports. This is just another major boost. So there are some major positive prospects for the cement industry in the near to medium term.
Thank you so much. I appreciate that in the cement industry and drilling down on those industrial goods. What about this latest development, Aurelua? What do you make of it from NCC asking the telcos to shut down within 2 weeks SIM cards that are not linked to national identity numbers? Just about a week ago, NCC also issued a notice that there should be no sale or activation of new SIM cards in the country. It looks like something is going on here. Some folks says this house play into the rising level of insecurity in the country.
Yes, I think when we saw this news, we were alluding to that fact, we're seeing this rising level of insecurities, and the government still needs to buckle down on, its data retention, harmonization of data in the Nigerian economy, to further, more or less stem this rising insecurities we're seeing. But on one end, that is on one end, it's a positive on one end, but we're looking at the other side, and it's really just sending more or less a wrong signal to investors. We're looking for private investments into broadband penetration. We're looking to develop the digital economy. We're currently seeing that we're currently in the digital age, but Nigeria is just moving towards that. And when we're seeing this sort of processes on this end, we do not really think the follow-on policy should be, disconnection of some subscribers who do not have synchronization with the national identity number. And, we saw, there was an audit that was carried out in September 2019, where we saw about, 9.2 million disconnected subscribers, and, we're seeing this in 2020, and this, precedes the Christmas season. During this period, we're expected to see a lot more communication, more active subscriptions, we're seeing more migration of people, and, we're expected to see more or less more communications from subscribers. But when we're having this sort of regulation, it just more or less sends wrong signals, and especially to the tech industry, which is looking to upscale its operations, and is also looking towards the global tech firms for more investment. And we don't think this should be follow-on. It should be a follow-on directive. We're expecting that the government could do more or less in this data that is currently mining, could do more or less to encourage more private investment, more global tech firms coming into the Nigerian economy. It could do more towards creating more job opportunities. There's so much more that can be done with data. There's so much more. This SIM card inhabits a whole lot more. It's how a lot of Nigerians communicate, and there's so much data that can be mined from in SIM cards, and it can be used to benefit the Nigerian economy more sustainable ways. That should be what we should be currently looking at, but not looking to send uncertainties and towards investors. We really don't think and given the stretch of time, we really don't think that really bodes well for the Nigerian economy.
Well, perhaps the 2 weeks is a little bit 2 weeks is a little bit tight in terms of how to get everyone. Perhaps maybe we'll get more clarity on what the timeline would be and how folks will be able to do this together. But again, the level of insecurity in the country is getting to a whole new level. And the whole investment we're talking about, if we don't get a hand on insecurity, I'm not sure those investments will still come in. That's my personal opinion as a business journalist, because if folks can use information superhighway to commit atrocities and things of that nature, and then our whole lives are not at ease, by the way. So I agree that we want investment inflows on one hand, but on the other hand, we need to be alive to see those investments work, by the way. The manner in which folks are just murdered overnight and you just kidnap hundreds of school children, I think it's a whole national emergency, if you ask me, right now. And it has to be dealt with decisively. 300 young boys from a school kidnapped in their pajamas and nightwears and taken into the middle of nowhere, for me, it's not a tea party at all. Whatever needs to be done has to be done at this point in time, because it's getting out of hand, by the way. Nearly half of the country, you can hardly go there for tourism, for investment, for visitation by road or whatever. We're in the middle of nowhere right now. It looks like insecurity is beginning to become a whole problem, even for investment in the country. But again, NCC will have to do a whole lot better with other agencies of the government to see how this is done very quickly without hurting investment on the other hand, or sending it. So communication will be very key here, I believe, for NCC and for the government, as a whole. Maybe we should also wait to hear more from them. But I think that's one story that the jury is still out there. But let's move on to Southern Africa, where the economic data coming through seem to be pointing to a bit of a steady outlook, but the second wave of the coronavirus will likely be an Achilles heel for this industrialized economy, with the restrictions announced yesterday by President Ramaphosa in terms of alcohol consumption, sale, shutdown of some tourist attractions, some beaches and what have you for this period. On the economic front, when you look at the PPI, the producer price index, 3.0% in November, employed persons 9.5 million. That sounds like good news. But the problem with electricity with Eskom is still there. So Pan-African is building 9.975 megawatts solar plant at its Vanda Mills just to help it move on, rather than waiting for Eskom, the utility company, to get its acts together. Angola has approved, the parliament says a budget deficit of 2.2% of the GDP is okay, but the state of emergency, which they call state of calamity, is extended until January 10, 2021. I think that's a little bit of it being dramatic, Oyeka, isn't it? It's a state of emergency, yes, but state of calamity, that sounds like, What do you think? Yeah.
It is a bit of a dramatic term, but I think it's also borrowed from something similar happening in the Philippines. I think it's a term that was sort of coined by a similar crisis in the Philippines. But yeah, the Angolan issue is a very interesting one. Just like, and I think it also paints like a very dire and grim picture for Nigeria, seeing how similar both economies are, being largely commodity dependent, and the commodity being crude in both cases. Both countries having similar inflation, not similar inflation levels, but high inflation levels. Both countries having some levels of FX, crisis, rapid FX devaluations, depreciations, and government interference in the foreign exchange markets to keep it steady. it just paints, a very grim picture for Nigeria, saying, what we have in Angola at the moment. Um, we I think that Angola is going to come out finally. It's such a large country. Multilateral institutions will still come to their aid at the end of the day. They'll be able to raise money from their domestic debt markets. Also, and we know that the new prime minister is trying, at least on paper, to take the right steps in improving transparency in their energy sector, in setting up their energy roadmap, basically doing things to show the foreign investment world that they are open for business, now. The sales that, they recently set up the Lisbon office for the sale of assets. So far, they haven't been able to do much. I think they've only been able to raise about $60 million from the sales, but they are really trying to ramp up on that in the next 2 to 3 years, and, push out, a lot of largely inefficient government assets to the private sector. Hopefully, they're able to go through with this and things turn out positively. Things will stabilize in the Angolan market, which will be very important for sub-Saharan Africa as a whole, given how important it is to the region.
Thank you. Speaking to this resource-based economy, Angolan story, and when the World Bank $1.5 billion for Nigeria, $750 million on 2 fronts, came in through yesterday morning. This is a non-budgetary support. Do you think this funding will bite anything significantly in the economy, in our balance of payments and all of that moving forward?
Not so much. I think we felt that yes, we do need this funding, but I think we more or less want to mention that this funding is a one-off payment, and we do need to see the sustainable increase of FX inflows. And if there's nothing done to there's nothing done to increase the FX inflows into the Nigerian economy, then we're in serious trouble. And because of the import dependency and the way we currently operate in the Nigerian economy. So I think we do really see that this will shore up the external buffers, but we do not really see so much effect that this funds from the World Bank is really going to have. But I think one other thing that we should look at what the World Bank announced yesterday was the partnership that is going to take on for more a 5-year period. So if we're looking at that, we're expecting to see so much more positives, a bit more optimistic on that end, because what we currently see, I think we need to see more of a guide for the Nigerian economy as to how it's going to achieve its level of sustainability, how it's going to further enhance the livelihoods of the people, the Nigerian economy, how it's going to also reduce poverty to a certain extent. So we should more or less be looking towards the partnership that should be going on with the World Bank, rather than the inflow we are currently getting from them.
Okay, so you're a little bit more positive on the side of this 2021-2024 program, that perhaps if this is a guided fiscal policy theme program with the World Bank, we're likely going to see some traction.
Yes, we're more guided with the partnership rather than the inflow we're just currently getting.
Okay, I'm sure the program must have been agreed with the Nigerian government, and that's why it's been, so this is a guided, World Bank guided fiscal policy action moving forward. Finally, on the on the North African front, the Egyptian authorities are moving forward with the whole idea of selling down on some of the military companies. That's one big news, by the way. Egypt selling down on some of its assets in military companies, companies that produce military hardwares and all of that. And perhaps some of them will end up on the Egyptian stock exchange. That sounds like music. to my ears, by the way. It looks like, well, President Al-Sisi is moving forward to see economy as king and the markets. Maybe we can do a bit more of that also here. The number of trade finance intermediating firms in Nigeria, in Africa, now about 65, according to Afrexim in 30 African states, a whole lot more onboarding this year, and that is putting Afrexim Bank on top of his game. Says the EFCFTA could also tap into $84 billion in exports when we kick off on January 1st, 2021. And AfDB is helping women with $14.9 million project funding in Sudan. Onyeka, very quickly, with what the Egyptians are doing, onboarding some of the government stake in some defense companies. I'm not sure we have so much a bigger defense. I'm sure we have a DICON, Defense Industry Corporation in Kaduna also. But I think broadly speaking, this is an idea we can borrow, isn't it? Government sell down its stakes in some of the state-owned enterprises and perhaps push some of them to you folks on at the stock market.
Yeah, it's something that we have been exploring since the 2017 budget, if I remember correctly. We raised this line in the 2017 budget that was sort of equivalent to income from sale of assets or something like that, and we've sort of had similar revenue projections in our budgets, even up until this recent one. And I know that we've taken some more concrete steps in Nigeria to doing that. The president set up an agency which is supposed to be headed by the Attorney General of the Federation, and their basic remit is to push for push the sale of certain assets, push the sale of certain government assets to the private sector to raise funds for the federal government. And I know that when we initially came up with this in 2017, there was some talk of even unbundling and selling off some parts of the NMPC that were not run as efficiently, talking of selling some of the government stake in the NLNG, and so a lot of things were on the table. I think now they sort of narrowed it down to some less efficiently operating assets that the federal government owns, one of which are the refineries, which they're trying to dispose of after some rehabilitation. Currently, the news of rehabilitation of the refineries is everywhere. Basically, we last year we heard that the refinery should be operating at 90% capacity by December 2020. I mean, we are December 2020. I doubt the refineries are operating at up to 20% capacity. So, there just seems to be an extended timeline on these things. So, yeah, we are looking at it. How fast we are moving on it is the problem right now. And, we haven't seen a lot of traction in that space yet.
I know. If you ask me, I don't think you need to spend a whole lot more money trying to rehabilitate the refineries before selling them. Just sell them the way they are for whatever value you can get, and just hope that when the private sector runs it, you'll be able to make money. Just have an arrangement. As long as you try to rehabilitate it before you sell it, it will never get done. Because we had a similar experience with Nitel, I remember. Way back, Nitel been trying to be revitalized and all of that before it was privatized. We brought in some consultant from abroad. They managed it for a couple of years.
Yeah.
We came out with triple-digit billions in losses. The guys that are from Germany, wherever, I can't remember the name of the country, they went away. It was all messy under the Ambassador's administration. Before the whole licensing of MTN and others just came on board. And the whole idea from the stock exchange, I remember back then as a journalist, was, look, bring Nitel the way it was to the market. It has landed assets. It has buildings. So if that is all the value you will get, just list it the way they are. And I'm sure if you look at the landed property and all that of the NNPC or the refineries today, you will get some value from there, even if it's only the land that we value and a few assets on it. I would just let it go and just close eyes. But to try and pump hundreds of billions into it, to rehabilitate it, that will take some years before you now position it for privatization. It's going to last forever, already, isn't it?
Yes, I do agree. So I think an immediate asset sale is what we currently need, being that, the revenue base is currently really struggling, and, there's really nothing, we're really seeing nothing that these refineries have been able to do so far. So a complete sale of the refineries now would further help that side.
Yes, just put it up for sale. Oyeka.
Yeah, so I definitely agree with you that we would get some revenue, we'll get some income from the sale of the physical assets that they have, and maybe some of the intangible assets that they have also. But you have to take into consideration the matching principle, because these companies these assets probably have some liabilities on their books as well, whether it's a form of debt, or it's a form of payables and the likes that needs to also be sorted out. And at the moment, with the way the assets are performing at the levels at which they are performing, it seems more likely that this is obviously not a statement of fact in any way, but there's a possibility that we might be at negative net asset valuation at the moment. And so in order for the federal government to actually gain some value from the sale of this asset, then they might have to invest a bit in the rehabilitation of the refineries, because it has some value added to the valuation of these assets.
Well, okay, we'll continue the conversation, because I think it's a whole lot of conversation around what is the bigger interest of the country, by the way, and the time value of money. If you spend hundreds of billion naira today to put it together, how are you sure that it's going to be in 6 months or 1 year before you begin to sell it? Now, who wants to buy it at that future value? So why don't you just cut your losses now and run? Because one, what it will help the country do is that you get these foreign investors or local investors come in quickly, turn it around very quickly. If they want to pull it down and build a new one, they'll move very fast and quick. They will going to have product availability locally. That will impact very positively on whatever the problem we have with product distribution, whatever in Nigeria. So I think the time comes as a gambler, as the old song goes, you need to know when to cut and run and just say, look, this is a bad business. I want to get out of it. I'll take my minimal losses, as it were. I'll find a way to defray it, maybe get it on the stock market, whatever it is. Then over time, I'll be able to get some gains back. But just cut these losses, because as long as they remain on the books of the NNPC, they will never become a yielding asset. That is one thing by now, it is clear to everyone. Those refineries will never, ever become a yielding asset, as long as it remains on the book. So just take it to the market and just wash your hands off it, get some water, some soap, like Caesar did, and just wash your hands and say, well, let's just say goodbye once and for all. And that's how we say goodbye on today's edition of the show. Thank you very much, Oyeka. We appreciate your thoughts from Vetiva, and Arolua from Greenwich Merchant Bank. Thank you both. Have a great day. We appreciate your time. See you tomorrow.